What's going on, guys? Welcome back to the channel. Appreciate you guys for tuning in. Gonna run through the market again pretty quickly here today. Won't take up too much of your time. First, again, we're gonna start on some of the long-term charts. Then we'll dial it down into some shorter term charts. Today's actually a really good morning for this because you'll be able to see at least one of the time frames that we're going to show today transition from positive to negative. So it will help kind of solidify some of these concepts in real time as we go through this. All right, so for one, we'll just start really far. This is a monthly chart. I think I posted this just yesterday. So back in 2008 was the last time we actually had some like monthly bearish market below the 50 SMA. So again, monthly chart hasn't been downtrending since like back in 2008, 2007 area or whatnot, 2008. We've been positive since, right? And so really the reason I'm bringing this one up is because it's super easy to kind of understand it. It's super simple, right? It's the fact that you're just once you're below this red guy, a lot of times you can go down. When you're above it, generally you're going to be upsided, right? So the monthly scale has been positive for pretty much ever, it seems. Now we're going to transition to a weekly. Now the weekly is going to calculate a little faster than the monthly. Therefore, there would be more signals on the monthly from bullish to bearish or bullish to bearish, up, down, etc. So again, here we break over 50 SMA, back test, and we've been up since. That's just this year alone. All right. You can see here over, up, under, down, over, up, under, down, over, up, under, down, etc., etc. All right, transitioning to the daily. Daily is going to be more frequent than the weekly. So again, for every time frame you go down, the frequency of signals would increase or does increase, not would, does. All right, so here's again the daily. So you can see the daily has been over the 50 SMA pretty much a good portion of this year. We've been upsided, break over the daily 50 SMA, up, under, down, over, up, under, down. All right, transition all the way to a 4 hour if we want to. Again, the 4 hour smaller than the daily, more signaling. You get the point. Just zooming in here real quick because now we're going to be getting close to, and you can kind of see along with this 4 hour, the 4 hour has tested the 50 SMA trend multiple times, right? And so on and so forth. All right, you can see today, right now, we're really close to that 50 SMA, so the market's pretty close to a 4 hour support back test and a 4 hour support, potential breakdown. I don't want to call it breakdown, but essentially what we see and what we know is that no market will ever break down until it's below the 50 SMA. So we know that right now the 4 hour time frame is uptrending. Could it break down? Sure, maybe, you know but it's not necessarily our jobs to always try to predict that something is going to break down. Generally speaking, we just transition through the time frames to see what is, as opposed to trying to predict what will. We just look at what is currently happening. So right now, currently, the 4 hour chart, the daily chart, the weekly chart, all of those charts are actually uptrending. Could they eventually break down? Sure, but hasn't happened. But now what we're going to do is we're going to transition down to a 30-minute chart. And this 30-minute chart, you will see has actually broken down a bit. One second. All right, so I'm going to transition here to this 30-minute chart. So you can see the 30-minute 50 SMA is right here, all right? So yesterday we came down to it, broke it for a second, and then we pretty much just kind of chopped it for remainder of the day leading into this morning. So what we're going to do is we're going to add a horizontal price point right here on it, and then we're going to come into a pre-market chart. All right. So, oh, wrong chart. All right. So now we're going to zoom in a little bit on a pre-market chart. So what you just saw was, again, the 30-minute 50 SMA on the SPY, and it's priced right here at this red line. It's breaking down. We derive some of our price points or SMA price points from charts that don't have pre-market data on it. So obviously, if you look at this chart, you're going to see the 50 SMA is here, where my cursor is at. You might be asking, well, why is this the 50 SMA? Again, if you follow my cursor, and we change this to a regular trading hours and take off pre-market and after hours, then it's going to look like that. And that's where the 50 SMA is, right? But again, there is pre-market and after hours trading. What we're looking at is a live trading hours chart. So any of the price action that's occurring pre-market or after hours, we're not going to see unless obviously we switch back onto an after hours trading chart. So now we're being displayed the price action. So what I can see this morning from what's happened is the market has successfully broken down the 50 SMA at about 5:30 in the morning. So 5:30 here, we get a close below, and at about 6 o'clock, whatever, we break down. And since then, the market has been breaking down below the 50 SMA. So what that means is pretty much right here, the market is starting to go bearish. And actually, I'm going to rephrase that. Because by me pointing here and saying the market is starting to go bearish, you could easily look back here and be like, well, what about all of this? So obviously that's bearish trading and bearish activity as far as the price action is concerned. 100% correct. But the trend doesn't actually shift negative until it would get below this green area, or sorry, this green horizontal line. Until it's below that, we don't actually consider that the trend has shifted negative. And obviously, if you were to look at the price action of the chart, you can see since here, market is up. That was actually a break over the 50 SMA. This is higher low, higher high, higher low, higher high, pretty much equal lows back to a higher high, right? And then it was just yesterday that what happens? We come down and we break down previous price action structure. Therefore, price action is starting to flip bearish. But price action is not yet below the 50 SMA, which is the computerized level in the market, if you may, that algorithms and a bunch of people watch that would actually flip the trend to negative. All right. So price action structure shifted from positive to negative, and then once that happened, and this morning we come below the green line, the market is actually shifted into negative. Okay. So pretty much what this means is the SPY entered a sell signal today on the 30-minute chart. This could lead to something more. We'll see. All right. So now let's take a step back and let's think about where we started. Right. So we started at the monthly, and remember what we said. As long as the monthly chart is over that 50 SMA, the monthly is positive. Then we go to the weekly. The market is over the red 50 SMA in the weekly, so the weekly is positive. The market is over the 50 SMA on the daily, so the daily is positive. The market is over the 4-hour trend, so the 4-hour is positive. And then as we go into a 30-minute, we see that, oh, the market on the 30-minute is starting to get negative. So that should help you understand the fractal nature of the market, right? So you can see that all those long-term time frames are uptrending, but on a 30-minute, we're just now getting the start of a downtrend. And this could last for 2 days. It could extend into a week. It could be for 3 hours, 4 hours, 5 hours, right? You don't control the market. Now, what would help this 30-minute sell signal extend into, like, let's say a 1 week selling move down? Well, probably like if it came down and took out, say, the 4-hour trend, which actually let me update this real quick to regular trading hours. The 4-hour trend's really all the way down here, which because I kept showing you the 4-hour trend on a live trading hours chart or a regular whatever, a pre-market chart. So it's really not even right. It's right here, right? But that being said, we know that we can't get big sell-offs in the market unless we're breaking down minimum like the 1 hours and 4 hour, etc. So the 30 minutes a short-term trading hour time frame that's just now starting down. If it's going to progress to something bigger, then the next step would be breaking down like the 1 hour. So if we go and look at the 1 hour, we'll notice that the 1 hour is pretty much the same price point as a 30 minute. So the fact that we're below both of those, that can add more selling pressure on this move. Okay. Now let's check something like a 2 hour. Not that I really watch this all that much, but 2 hours all the way down here, right? And so we know we've kind of bounced in that area. So it pretty much means that we could very well sell down to the 1 hour and then bounce, right? So the point being is you don't get drastic sell-offs in the market unless you're taking out longer term moving average trends like the 4 hour and the daily, et cetera, and the weekly, et cetera. Therefore, if those are all trending very positive and strong, you must keep decreasing, right? Until you're going to find something like the 30-minute short-term trading system that we use, which pretty much tells you when the market's up or down in the short term, right? And so what it says is today we are downsided on the short term. So in the short term, we'll be looking for pop to shorts for as long as the market respects its breakdown. Now your brain's going, Connor, well, how do we know if the market is respecting the breakdown? That's where I would use volume weighted average prices in relationships to the breakdowns or the signals that we're getting. The way that I personally track the signals when they're up or down is I anchor volume weighted average prices to these signals. And as the market is trading in that direction, as long as it remains below some of the key volume levels of each of these signals, then the trend remains. If we break down, trend down for 5 hours, and then the market starts to reverse back over the volume weighted average price of the breakdown level, signal, etc., then that tells me all of the participants of the signal aren't strong enough to hold down their volume weighted average price. You can almost think of it, so pretty much actually a good way I just thought of teaching this is that everyone has been taught in the investing and trading world and wherever, for the most part, that the volume weighted average price of a stock on the day is good to track because institutions want to get a deal, so they want to own below the VWAP and at least sell at the VWAP or higher. All right, so let's take that logic and then apply that to repeatable, specific buy and sell signals on the S&P 500, each of which creates a new game, but same game. So let's just say each buy and sell signal is the start of a new basketball game in the stock market. May look a little different, maybe a couple fouls here, whatever. The game won't play the exact same, but it is the same thing, which is a buy or sell signal, right? And of each one of those buy and sell signals, we apply a VWAP. And so we trade around each buy and sell signal, volume weighted average prices, specifically one way or the other. So to reiterate, instead of using VWAPs on stocks or, a VWAP on the S&P 500 for the day, looking to have an average price below a, particular VWAP for the day, we look to, do the same thing, but with VWAPs in relationships to repeating buy and sell signals on the S&P 500. That's pretty much it. So, yeah, with that being said, all you got to know is all the long-term stuff on the stock market is up. So until that starts breaking down, there's really no need to fear, panic, or whatever, ever really panic. So yeah, things are good. Hope your stocks are doing okay, and catch you on the next one.